Michael Glennon from Glennon Capital. This week, what we're going to talk about is what to do when you get it wrong. So, whether you're a professional investor or whether you do this to look after your own superannuation, you're never going to have all of the investments in your portfolio that are going to go well. You'll get some things wrong, which is natural when you're trying to take risk. If you don't take any risk, you're not going to generate any return. However, as you've seen recently in the small cap market, there's been many companies that have quite significant share price falls. So the question is, do you just sell that stock and get straight out, or do you buy more? What do you do? And it really comes down to looking at the business. So quite often people, there's some sort of short-term noise, they throw the business out, all of a sudden the share prices rebound and they end up selling when they really should be buying stock. So elaborating further on that, what you really need to do is get into the business and understand whether you made a mistake and to recognize that you made a mistake and sell that position, or whether there's still good fundamentals in the business. It's a short-term issue and really maybe you should be buying more of that position at that point in time. So to illustrate this further, if you look back what Warren Buffett did on many of his investments, he looked at the business and he got very conservative about the valuation. So for example, he would look at the receivables in the business and he would discount those quite heavily. He'd look at what was the salvage value of assets within the business. So if you go back and you do all of those things, you'll get a different valuation to the business, which is your sort of worst case conservative value of the business. And if the shares are trading below that level, then that's a good indication that you should buy it. However, if you go back and you have a look at the investment and you suddenly realize it wasn't as good a quality as what you thought it was, and it may have been trading on a very expensive multiple, that's really the time where you need to reassess and say, look, I actually got this wrong. I've taken a loss and it's best to cut that loss as soon as possible. So I hope that helps. I'm Michael Glennon, and hopefully you don't get stuck with too many landmines in your portfolio. Thanks for watching.